Hey folks, we are just reopened on Globex for trade Sunday evening, 2300 hours, and we are screaming to the upside on oil and the S&P 500 down pretty hard here. Of course, what's happened, and I'm going to just switch over to the chart straight away, is that we have massively elevated risk on the Russian-Ukrainian situation. Russia now putting their nuclear force on high alert, and you're seeing really across the board we are down 1% on, or I'm told we're down, yeah, just around 1% on the euro dollar. Obviously we're up 0.8% on the Dixie. You're seeing oil now up 7.65%, trading 98.60 at market right now. So the SPOOS is being one and done to the downside, already starting to find a bit of buying down here. So we're down 2.4% on this reopen on the SPOOs, down 1.24 on the Dow. The DAX is actually yet to open in about a little under an hour's time. At midnight, the DAX will reopen for a trade, but you can imagine it'll be kind of sitting to the downside, and we have this massive gap here on these U.S. equities on this reopen of trade here. So, but the main show right now, and we're not really getting a huge up on nat gas, but oil you can see here now standing back into the 100 spot. So a very strong trade here to be had. Really large gap up open here. So as I said, 7.6% up on this risk. So not only have we had the elevation of and the readiness of these Russian nuclear forces, or the heightened readiness of these forces, but we also have the banning of certain Russian banks from taking part in the SWIFT payment system. So not all of the Russian institutions, but by and large, most are now banned from the SWIFT system. So that is going to have repercussions for energy and commodity trading all across, well, obviously Russia, but all across the whole system, really, when it comes to trading commodities. This is a huge big deal. There's an article posted in Bloomberg earlier on this evening about traders not even wanting to touch Russian wheat. And why is that? Well, it's because they don't think they're going to be able to get it delivered when they wanted to, given that there may be blockades, and there are now existing blockades, but they might, number one, not be able to take the delivery of the Russian wheat, but number two, they might have their money
And
frozen
we do have some
or
comments
the
from
payments
RBNZ's
not
chief
be
economist
enabled.
Ha.
So we're really
Says
just,
it's too
quite
early to
far
say
up
what
here,
effect
guys,
the Russian situation
pretty
might have
hardcore.
on RBNZ policy. Notes that trade links between New Zealand and Russia and Ukraine are minor,
So we're just really going to monitor oil here. Now, for me,
but also notes some
any
impacts
of the
on
guys in the
commodities.
Discord know that there's only one price for me on oil, and that's
While RBNZ's chief
$107.
economist says still have
Obviously,
more work
it's
to
up
do on
here,
controlling
right? But
inflation
I think
and need
this is a
policy to
big
be
buying zone
contractionary.
here that we have, up to 102.72s. I think the market is going to trade this by the time I wake up in the morning, 8 a.m. when we kick off the European markets. I think we'll be trading up
And
here, but for
RBNZ's
now,
Ha says
this
rates
market has moved a hell
of
of a lot
100 basis
very
points
quickly,
above
and I
neutral of
just don't
2%
think
is reasonable from
we're going to
historical
immediately
perspective.
trade to that upper pricing right now. But
And
I
notes that
think
50 basis points
trading at the
moves
moment
are
is
a
really
possibility
for
if needed.
the brave.
Seeing those comments there from
Things are
RBNZ's
moving
chief
pretty
economist
wild
Ha.
right now. And as you can see, this happened over the Houthi attack on the Saudi oil facilities, and that we had a gap up open of 15% gap up open on oil, and the best trade was actually to short oil, because at that point, because we were so aggressively up, the average pricing was actually way further down. So we've opened so aggressively up here, the average pricing is actually, like VWAP is actually like down here. And so the market, as much as it wants to struggle and push and trade up here, and it will, in my estimation, it just has to gather more sophisticated buying down here at suitable areas near average pricing. And that's, nobody wants to be barreling in. If you're a sophisticated money trader, or portfolio manager or a hedge fund, you're not going to be chasing price higher and higher. You're going to let that wash out and then fold back. And then when people think it's just dead to the upside, that's when you get, that's when you get a good opportunity to get in here and re up and lift those offers again. Because you'll get people then. You'll have people then getting short, thinking, oh well, actually maybe oil needs to go down over this level of news, and that's when generally people get wiped out and they get net short, looking for a gap close, and then buyers just lift them out of it. So any which way, look, the markets are always kind of wild in that sense, especially when you're an oil trader. So yeah, just really, I knew this would be an interesting open with this elevated nuclear risk. So you see equities shaving off a little bit of that downside so far. Here the S&P, big gap here. Just I'll get rid of that sort of confluence area down there. Big gap, right? Big gap here. So we're still down 2.48% market right now. So let's see. Nat gas is not really so enthusiastic right now. I'm not tracking the right times on nat gas here. Oh yeah. Okay. Sorry. I'll have this start at 2300 hours, and there we go. Yeah. So really not much of an open on nat gas. I mean, it's up. It looks like it was up about 4%, 4.6%. It's just kind of pulling back right now. But yeah, the euro, I mean, that has been a hell of a move. That is a hell of a move for the euro. Really is. So currently, just a little oil trade here. T-notes also up. The bonds must have been up about 1.2% on the top there. Just again, pulling back. Now a little bit of that volatility coming out of the entire market right now. Is the euro going to close this whopper of a gap here? So let's go out in the weekly bars on the euro, and you can see what's happened here. So if we zoom right in, you can see last week trade here, and then this week opening up quite low, below that support 121.60. So that was a bit of an area there for us. That was actually low of the 30th of September 2019. So yeah, I think target is really down here, to be honest. I have to say, the one spot one evens almost. Yeah, so I'm not going to stay on too long. You also see cable, no prisoner or no refugee from this risk, and down quite a bit here as well. Down, well, just down 0.5%. Of course, it's not as big a weighting in the dollarized basket that the euro is, and so that's why you're really seeing that euro getting absolutely hammered here on this flight into the dollar. Let's have a look over at the Dixie as well. You see on the weekly bars, it's not much of a big deal, but we're up into the range, high in the range of last week here, just below 97.74. So yeah, I mean, I think more risk needs to be built into this Dixie, and I think we will be trading 100.4 before the end of March. Yeah, I really think we will. So those oil longs finding it quite hard right now. If you were buying this, if I get into like the 1 minute, if you were buying this on the actual, just hitting market, it was quite hard to get this actual 94.99 price at the open. There's a lot of cramming, a lot of scrambling to get long. And then we push up in that 1 minute, 2 minute, 3 minute, 4 minute, 5 minute, and it topped out in the 6 minute, and then down we come, right? So, generally, I just see people chasing these things all the time. And I mean, in my career, I've probably traded maybe three sort of tier one high level risk events of like the Houthi attack on the Saudi facilities, this, blockages in the Straits of Hormuz, a few different things. Had a 20 million build on DOE, which is absolutely insane. The price went up, by the way. Trades a couple of these things, and every time, people just chase price, and then they end up just getting wiped out. It's best to actually leave these things alone if you're not really experienced enough to interact with markets that are this volatile. So just check in on the guys in the Discord. Lads, you should all be tucked up in bed with your cocoa. Or Wiz, I thought you'd definitely be tucked up with the cocoa and the slippers on. Yeah, so we're about 15 minutes into this. Normally I don't like I only trade these sort of high level reopens for about 15 minutes, half an hour. Gold, of course, yeah. Forgot to mention gold here, lads. Sorry about my voice being very gruff, but I got this cold thing, which is actually way worse than COVID. Yeah. All right. Well, look, we're up 1.5. Where's my chart calculator? Well, it looks like the reopen went up as high as 2.39%. Okay, let's go back to sleep here. That's not interesting at all. Still can't hold above 1929s. Really can it? I mean, gap, obviously. Gap here is. Oh, we'll leave it to the open for now. So gaps everywhere. The biggest, of course, is on the euro. Is that going to recover? I think it will. Yeah, I think it will. Are we going to trade it? Don't know. I don't. Kind of leaning towards not trading those right now. I put a little size on it. So be sure oil since we started streaming. And actually, I'm out now. I'm out. So that's the beauty of using OCOs. You don't have to stare at it forever. Yeah, exactly, Ali. We don't really bother talking about gold anymore. It's a dead trade, man. Officially, as per CME, the worst trade of 2021. I just love bringing that statistic up as much as I can. Spot the guy who lost money on gold. Interested in reshorting gold or oil, actually. So much selling here on the book. But as I pointed out, what I've seen happen is you get that push, you get that pullback, and then at some point it starts to like flatten out, goes real quiet, and then you just start to see aggressive buyers coming on the book a little bit, pulls back, they re-up, you get sort of an incremental new high, pulls back, they re-up again, and then the sellers just step out of the way. So interesting, we did not hit 100 WTI on this. It looks like we definitely did on Brent. I'll tell you that for nothing. Going to take a long on the euro here and stop out low a day. So you can get a gap close. This is not trading or investment advice, by the way. Your trades are your trades, boys. Well, oh, Luca. Did you trade it, Luca? Good, 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 good. Well done. Yeah. So this I mean yeah, this is pretty tame actually compared to on oil compared to the Houthi attack. Like for 2 minutes, you couldn't get an order in like on the ladder for 2 minutes on the Houthi attack because it was just so much indicative pricing was on the book that like for about 5 minutes before it opened, I watched the ladder move up like probably $10. The indicative price just kept moving up and up and up and up and up. Then it opened, and there was just this meltdown on the exchange. Like people trying to get in, just massive sizes trying to get in, people trying to get out. There's lots going on. Um, whereas this is only like literally half of that, so it was 7.5% up on the high. Actually, but I don't think it was even that. No, it's not even that big because this topped out at 7.5, whereas the Houthi attack opened at 15% up. Yeah, this only gapped up to 3.47 on the open here. So, all right, so yeah, get the big chart up on oil as well. By the way, so there's this trend, right? This is the weekly bars, lads. All right, so this trend starts on the week high May 2nd of May 2011. Next touch point is the week of the 26th of August 2013, and that gives you this downtrend. Now, I don't really give a shit about this trend, to be honest, because I think we've seen these type of downtrends broken numerous times, like on this market. We are in a look. I mean, I've read a little bit of oil history and volatility in oil history, and I do agree with those energy commentators say that we've actually never had this level of tightness in the energy market before. I would definitely agree with that. And so, under that level of macro event, you just don't want to, be the one to blow up your account saying, well, I was short in oil because I thought, it should come down. Well, no, still nothing but go up for 2 years. All right, so I'm going to cut the YouTube stream here. Thanks for tuning in, everybody. Hope everyone's doing well out there, and stay safe. And I'll be talking to you during the session. Cheers.